All right. Hello, everybody. Welcome back to another episode of Palantir Weekly. This is episode number 180. We are back from a week off, and we've got a lot to discuss about Palantir. This is not the 2024 year in review. That episode will probably be happening next week or early into the new year. There's going to be a regular Palantir Weekly episode, but there's a lot of stuff to discuss. We got a bunch of different topics around earnings, potential future results. Karp had a video that he sent out to investors and employees, also was named the Economist CEO of the Year. So we'll be discussing all that. And outside of that, we'll be talking about 2025 expectations and what we think is realistic for Palantir next year. With me, I've got Matt Money, I've got Amir, I've got Arnie, and I've got Davis. Davis, what's up?
Hey, how's it going, guys? It's been a while since I've joined one of these things. I think this is my third time, so don't expect too much value from me, but
Welcome.
Thank you.
This is Davis's Twitter. For those that don't know, he's been long Palantir for years, been part of the community for years. He wrote a song about Palantir that I'm not going to play right here, but as you can see, that's him literally singing the song. So definitely an OG of the community, and happy to have you on the show today. All right, I think let's start off with this question because it's more of a general overview, and then we'll get into the nitty-gritty details. This is not the year in review for episode for Palantir. We'll do that more in depth for next week. But in general, we are coming on to the last 2 days of the trading year. Palantir looks like it's going to close hopefully above 70, maybe even 75, 80. Right now we're at 79. And it's been a pretty exciting year for Palantir. So let's just get some raw thoughts on how people have thought this year has went in any way you want to describe it. Obviously been a little bit of a magical year. And then we'll get into the actual segments we have for today. Arnie, we'll start with you. What were your raw thoughts on Palantir's 2024?
I think this year was beyond any expectation, even if we were already excited coming into the year because we were aware of how the company was performing, how strong the AI wave was. And since we are here, we were already aware how Palantir was matching perfectly the narrative that was emerging into, hey, Palantir is not just a random AI company, it's not like a C3 AI company pretending to be a very good company. Like, we knew Palantir was an amazing company, merging a very, very strong trend. Personally, I was unexpecting such a big impact, but hey, I can't complain.
Davis, what was you're not obsessed with Palantir literally every second. You actually are doing other things with your life. What has your experience been like in 2024 with having a pretty sizable position, but not literally creating content about the company every day? How has it been just to hold on to the stock?
I mean, just as Arnie said, it's just been beyond expectations. I wasn't expecting to make life-changing money like so fast. Like, you guys know that I'm still in school, and I still fully expect to work my 9 to 5. I don't feel like I'm going to quit anytime soon, even though arguably I might be able to now, which is just insane to think about. But one thing that a lot of us, or especially me, was waiting to see was just the fruits and the labors from their AIP, their boot camps. And we're like, oh, when's that revenue going to start showing? Like, when are we actually going to see what this product is going to deliver? Because we know that they're giving it away for free, basically.
Davis, real quick, put the mic a little bit closer to you. It's just coming in and out. Yeah, there you go.
Okay, is that better?
Oh, yeah, that's a little too close. A little bit away.
Oh my goodness. All right.
There you go. Perfect. You're good.
But yeah, like, I was just waiting to see, like, when is this actually going to take off? When are they going to prove themselves? And I think they've done more than prove themselves this year.
Do you think that I'm assuming you thought maybe we would end the year at 30, 35-ish. So the run to 80, how do you describe that?
Remarkable. Like, I remember I sent you guys a video of my mom saying that the stock was going to end at 50. And I'm like, in the video, I'm like, Mom, market caps don't work like that. You just don't understand. She's like, no, Amazon went to 3,000. Palantir could go to 3,000. So she's like, it'll be 50. And I was like, no, it's not. And lo and behold, we're at 80. And now she's telling me, oh, it's going to be 100 by January 1st. And I'm just like,
you see, always trust your mommy.
I know. I'm like, all right. So I'm not going to argue with her anymore, and I'm just going to say, okay, 100, 100's next.
I had the similar situation with my dad. My dad was like, "It's going to keep going up." I'm like, "Dad, it takes time," and it's like my dad's been right the whole year.
Except she doesn't understand how calls work, and I'm like, please, let's not go up there that fast. Okay, we can wait like a month or two. So yeah.
Matt, your thoughts on 2024?
Well, I just want to, as always, I like to humble myself and let people know that I was wrong. So on February 19th of 2024, I published a Seeking Alpha article on Palantir exclaiming that we would have a $25 price target for year end of 2024. That obviously got blown out of the water as we are winding down on the actual year, I guess. And so, as Arnie kind of put it, it's very remarkable what we've actually been able to see. And I never expected to get anywhere close to this. I thought we'd probably start to hit some sort of walls when we hit the 40s, 50s, and here we are. And I think it's just a true testament as to, the unique software that I started using 6-7 years ago at UDOC, Undisclosed Oil Company. And, I saw a very bright vision for these guys. And I said, as soon as these guys go public, I'm going to buy in. And I did just that. And I'm very happy that I have. And so excited for being a shareholder, I guess, now for over 4 years and hopefully for many more years to come.
Amir, or go ahead, Arnie. Then we'll get to Amir.
No, I was just wondering if this is the first time you have been so long in a company. In my case, I've been studying and investing in companies for a long time. I think I've never held for 4 years.
Yeah, it would definitely be for me. I mean, because in my first year of investing, which is buying random stuff, selling in and out of it. So I would say this is definitely my longest hold. Matt, I think no. Matt's been holding stocks for a while. Probably up there, but maybe not your longest. The question is this your longest hold?
Sorry, I wasn't sure if that was directed to me or everybody. Yeah, I've had stocks that I've sold recently that I've been holding since 2014, 2015, as I've consolidated and moved them into bigger, larger positions like Rocket Lab and Google and Bitcoin, etc. But is this the longest position? Probably not. 4 years. It's my longest current position, I guess, that I still have in the portfolio. Maybe Bitcoin surpasses that because I did start buying Grayscale Bitcoin Trust back in 2019, 2020. So it's up there for the remaining positions of the portfolio, but not my longest ever.
Davis, this is your longest hold, I imagine.
Yeah, dude, I haven't even been investing for 4 years, probably 4 years now. So this is definitely my longest hold. It's one of my first buys too.
Imagine being investing for 4 years and outperforming 99.9% of the professional fund managers out there.
Oh, I got the magic touch, man.
You got the magic touch. That's correct. Amir, your raw thoughts on 2024 for Palantir?
Yeah, I took the opposite bet of Matt at the beginning of the year on Seeking Alpha. The stock is up 380% since then. So obviously I knew all along. No, I'm just kidding. Of course, it exceeded all my expectations in terms of the stock price. I can see in the article I had a fair value per share of $18 and it was trading at 16 back then. And man, we have gone a long way since then. And, it exceeded all my expectations in terms of the stock price. However, in terms of the actual business, and probably Palantir's as well, considering some of the stock appreciation rights vesting schedules, it's also exceeded their expectations in terms of the stock price. But if we look at the business, I would say that it's more or less in line with what we have been talking about for a long time now. Meaning we have seen excellence from the business. I mean, we saw efficient sales strategy starting to work out. As Davis mentioned, we started to see hints of AIP starting to monetize properly. We saw an ability to scale and a path forward to sustain that scale. I mean, we saw a continued influence on a global scale. I mean, just the business as a whole has been really developing at the pace that we have expected them to. I mean, probably all of us here have pretty high expectations of Palantir in terms of what the business needs to do over the coming years. And I think they've been meeting those expectations. So I think the stock price probably has rewarded us a bit prematurely, but we'll see. I mean, the business is executing, so you can't really not knock them for that. But yeah, it's been an amazing year for Palantir as a business and the Palantir shareholders.
Yeah, I agree. I mean, my take on this is that this has been Karp's year. He showed the world that he wasn't playing around when it comes to running a very large enterprise, and that I think he thinks that there is a real shot this thing can be much, much more bigger in the future. I think the stock blew away everyone's expectations. It's kind of funny because in 2019, when Tesla was doing its 10x or 20x, whatever it was doing around that time where it went just straight vertical, I remember experiencing that, but not being invested or like kind of buying some shares here and there, selling shares here and there. And so not really knowing what it felt like being in that process. And with Palantir, I think all of us got to go on that journey together, just seeing it kind of go vertical, which is kind of scary. And a lot of us were scared many weeks of just like, can this actually keep up? And I'm sure that fear is still there that we'll talk about. But nonetheless, it's going to end the year vertical from 16 to 80. And I think that's just one of the most exciting things that we all got to be a part of. Last thing on this segment, and then we'll move on to some other exciting stuff. Here's the All In podcast actually mentioning Palantir as their biggest business surprise. We also had the All In podcast last week mention a take on Alex Karp, and there was this viral clip of him saying, we don't play golf, we actually win, we execute. Chamath ended up sharing Arnie's repost of that, which was super awesome. So the media coverage is really getting to compound. And then here was them on their holiday special talking about Palantir.
Okay.
Let's go to business surprise. Did you have a business surprise over there, Saxy Poo?
I said Palantir was the biggest business surprise this year. I mean, I thought the company would do well, but its stock went up 5x this year from $16 a share to 76.
Completely counterintuitive. The market cap of Palantir just passed the market cap of Lockheed Martin. The amazing counterintuitive thing about Palantir was how much time they spent with their customers. Everybody shat on that idea, and they were totally right.
Okay.
Let's go to business surprise.
Now, what I really loved about that, and we can get your take on this and then move on, that last sentence about everyone shat on them for working with their clients and building these decade-long relationships with Airbus and BP. And it was right, because we've come to the realization that you just can't sell shitty software anymore. You've got to actually build something of value and then deliver it to the people that are buying it from you.
It's funny because Chamath is probably one of those that chat on Palantir. I don't know if you guys saw, but someone dug up a tweet from 2021 where he actually said F no to ever working with Palantir. So, I mean, Chamath has come around to a new vision.
Yeah, this is the tweet right here. So I mean, this is a full 180, right? So someone said, will you be working with Palantir to resolve problems? And Chamath's like, no.
I think the tweet was about like COVID supply chains or something like that, and he said F no.
Which is ironic because Palantir actually worked a lot on that. So,
yeah, I think it's a testament to why they left Silicon Valley, right? I mean, they weren't the most well-loved company, and so they had a different culture, and I think that's one of the prime reasons.
Davis?
Sorry, Davis. I'll let you go. But just quickly, it's so funny because the All In podcast have been talking about AI solutions, and every time they discuss it, every Palantir investor has been like, why aren't they mentioning Palantir? Because they're talking about AI guardrails, talking about AI safety, how to implement AI, how to extract value from AI. We're like, guys, Palantir, and they just never would say Palantir by name. However, it seems once the 47th president was chosen for the US, suddenly they are really open to talking about Palantir by name, and that's like a huge 180 for all of them, I would say. But yeah, Sachs was the earliest one. I think he mentioned publicly that he invested before $30 per share. Looks like a genius now, but yeah, for the longest time they would just never mention Palantir, even though every topic they would discuss like on a weekly basis, they just like totally Palantir would solve all those issues they are discussing. They would just never say the name Palantir for some reason. But here we are now.
Do you think they purchased the shares before talking about it?
The classic accumulate and pump? No, I don't know. No idea.
I don't think. Yeah, Davis, go ahead.
I was just gonna say, like one, I don't really I've never watched an episode of the All In podcast, but I thought it was kind of interesting in the beginning when he says Palantir and the audience actually cheers.
Yes.
So it just shows that the name is getting out there, because if you did that 2 years ago, no one knows what Palantir is. I mean, still a lot of people don't know what it is. But the fact that last statement when he's like, everyone shat on that idea, a lot of Palantirians, Palantards, we shat on that idea too. We're like, no, we should be getting revenue from these people. And like I said, I'm not a numbers guy, but I'm just like, yeah, why are we giving away the best product for free if we know it's so much better than the next competitors? Why should we give it away for free? But then it just comes back to, do I trust management? Do I trust that they know what they're doing? And that answer is yes. So I'm like, okay, I'll let the story play out. And it worked.
Well,
Arnie?
I was going to say that exactly the same thing Davis highlighted. The fact that people cheer of Palantir now is so weird, because like 2 years ago, when I was talking about Palantir at this value investing conference I like to go every January, it was like, what the F is Palantir? Then 2 years ago was like, that sucks. Like, how disgusting is that stuff with more SBC than revenue. And then like last year, it was, oh, come on, like you've been lucky up to now to resist. And now it will be very curious to see, like, I think you need to be scared when all value investors also start appreciating that. We're not at that point yet, I think, but it will be interesting to share some views on that in a couple of weeks.
Yeah, I think this has just been one of the coolest years ever for Palantir. And all of us who've been here since 2022, 2021, particularly 2022, we remembered, like, no one would cheer. Most people didn't know what Palantir is. And Davis is right. The majority of the world still doesn't understand or know the name Palantir. It's not a Tesla, Nvidia, or Amazon yet. And in 2022, there was a lot of booing on the name just as a concept. So to go from that, I was talking to you about this, Arnie, a couple of days ago. I felt like in the last week, Palantir's got more media coverage based on David Sachs and Bill Ackman retweeting Alex. So there was just so much random stuff that was happening last Sunday on Palantir. There was more media coverage in that 48 hours than we got in all of 2022.
Mm-hmm.
I mean, Clark was the first guy to meet with Zelensky, first public tech CEO to meet with Zelensky. And you had like maybe a couple of websites picking it up. I think CNBC maybe did a couple minutes on it, and that's it. You know, the stock didn't move when that news came out. And now it's like David Sachs is in the White House. David Sachs invested in Palantir, blah, blah, blah. It just compounds. And here we are.
Do you think it's a little bit of a case of, if you can't beat them, join them? Like, for example, I think the Shamath thing, when he was like, no, I'm not going to be using them for my COVID kind of tracking or anything like that, they might have been upset of how they were trying to raise capital and how they were trying to, I guess, get the company public and all that. And now it's almost like its own mini, I don't want to say Google, but one of the words that Elon always said about Google is that it's a mountain and you can't kind of go through it. Do you think now it's gotten to the point where Palantir is such a like massive wave of the future coming through that you can't stop it? So you can't be negative against it at this point. It's getting so large that you literally have to join it.
And look, we have not only Bill Ackman, we have Elon Musk now publicly following Palantir, commenting on Alex Karp being based, and I think things have got to a point that they are almost ridiculous. Thinking of this tweet that went super viral of myself reposting this tweet, but also this tweet, like the original tweet had like 1,000 likes. Like the amount of attention that the bears are getting is insane. Like I feel we were the media back then. Now the attention is on the mass media and on the bears, almost to a point where even if like the stock is at all-time high, I feel that the bears are more angry than the bulls are excited. Like the bulls are reasonably aware that, okay, the stock is very expensive, but I'm not going to sell all my shares now. I'm at most I can reduce, but like the vision is unfolding upon our eyes, and people, like the more people hate, the more people get interested into this, and paradoxically, they help the business being recognized. Like imagine the stock stays flat at this level, even if there are like new flows, but there are all these bears, all this is ridiculous, this is no sense, this is stupid, blah, 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 blah. At least the people start asking, wait a second, again, what is Palantir? And when they checked what is Palantir like 2 years ago, yeah, it was a slowing company, unprofitable. But if I look at it now, it's like even from the eyes of like a not very, very sophisticated investor, not a tech investor, it's like, wait a second, this company is growing revenues, it's accelerating. It was burning cash. Now it is literally printing cash. Like, well, yes, it is expensive, but you know what? Maybe I can buy a little bit. While before, it was very difficult to see the value.
You know what it kind of reminds me of? Not to get too political or anything, but everyone hated Trump. No one wanted anything to do with him. And now you have all these big CEOs trying to become friendly with him, donating to his campaign. And I feel like the same thing's happening with Palantir. They're like, okay, what is Palantir? What do they actually do? Let me see. Oh, we actually like this and it's going to help us. Let's change the narrative and let's be friendlier. Let's actually work with them instead of just constantly attacking them or ignoring them or trying to shut them down. It seems very similar to that, in my opinion.
Yeah, and I mean, to wrap this up, I think winning solves everything, and Palantir has been winning, and it's really, really hard for people to keep critiquing them, especially the whole black box, ill-minded critiques. If the company's executing at some of the highest of levels. In terms of the bears, I agree with you, Arnie. The bears are getting more upset that Palantir goes up every dollar than the bulls are getting excited, because naturally bulls are starting to get a little desensitized, right? Because like we've seen it go up a lot, and all of us are maybe waiting for a pullback here and there, and we understand stocks don't go up forever, even though Palantir is defying that reality. But the bears can't handle it when you go up another dollar, because to them it is quite literally ridiculous. And I think what's really fun about this is that this is why this community is so cool, because you've got people like Amir that are very well versed in valuations, and he's able to talk to the bears by saying, well, why don't you look at the intrinsic value? Don't give me all this pricing stuff. Look at the actual valuation, and then let's have a conversation. You've got someone like Matt who actually works with the software every day. So when he sees the bears say, well, this thing makes no sense, Matt's like, well, wait a second. I'm using this every day. It makes a lot of sense. And then you have all these people in the community that can collectively fight back against the bearish narrative, even if something that the bears are saying are correct, which is maybe it's getting extended, valuation, yada, yada. But at its core, Arnie, when you said we are the media, it's becoming very real, because now if you try to paint a narrative around Palantir, it doesn't have the ability or a foundational element for that narrative to pick up steam, because there's so many people like an Amir, like an Arnie, like a Matt that are saying, no, you're wrong. And here's why.
And look, there is obviously a lot of noise. Now everybody is discovering the company. But I'm realizing that, this has always been true. But the more we go through the story, the more this becomes, how do you say, truer, more true, is that when you see something that looks so weird, so exceptional, I'm realizing that rather than saying, oh, this is overvalued, like this is a bubble, we should really try to ask ourselves, how do I know I'm not wrong into saying this is a bubble? And fun fact, all these bears have very, very strong opinions. Meanwhile, they are underperforming. And if I just ask that question, okay, let's say I am wrong. What I'm not seeing here, they would probably have a different take. They would have probably different performances. Because the fun fact is that many of these guys, this is ridiculous here and there, this is obscene. They're like a long China, long stuff that are not performing. And if they just ask themselves, okay, let's say that rather than pretending to be right, I start from the assumption that I'm wrong. Let's try to understand what I'm wrong, how I'm not wrong. That would have gave them probably a different perspective. Because I'm the first one saying I'm completely surprised that we arrived to this valuation of 50x sales. Like we were
70. It's 70x sales, so a little bit higher.
At the beginning of the year, I wrote this article, saying, "Oh, guys, like the stock has already performed 180% year to date. So in 2023, we will see like another bump in 2024, and actually we went like even crazier. Okay, and Like here I explained like why I expected the growth to converge back to 30, how the analyst expectations were so low, but in reality the growth was accelerating back, like how low the analyst expectations were, because analysts were expecting 21% CAGR, which was even below the AI software market expectations of 23%. Essentially, analysts were saying Palantir, despite it was the only company accelerating in the space, it was actually set to lose market share. And it was like, this makes no sense. And my conclusion was, okay, guys, this under $18, yes, seems very high, but I think there is still much upside. But
look at that cute number, 14 times revenues. Look at that. What a we are not seeing 14 times revenue anytime soon.
I wrote this sentence, if a revenue growth accelerates to 30% or above, I believe Palantir EV sales could expand to 20x EV sales multiple. That would correspond to 66 free cash flow multiple under a 30% free cash flow assumption. So the growth has arrived to 30%. The free cash flow margin has actually expanded to more 40%, and that has a huge implication into the valuation. But what seemed to me like high 20x EV sales now has been like completely ridiculized.
Yeah, it has been absolutely an incredible year for Palantir. And now the question becomes, going into 2025, how much more momentum can we get? So let's get into this first big topic of the day. Amir, I'm going to just share your tweet, and I'm going to let you kick it off and explain what we're looking at here.
Yeah, let me share my screen.
Oh, actually, yeah, you share yours. That'll be easier. You can do
that. So I just have the screenshot in my latest article, so I think it's easier. So what we're looking at here are the outstanding stock-based compensation expenses for Palantir ever since they went public. And we can see that started off at about 2.2 billion, and it's been moving down slowly. However, as of 2024, you can see this yellow bar start to appear, and those are stock appreciation rights. And we can see we have a new blue bar as of Q3. And that's the interesting one that Mariana pointed out that we've been talking about a couple of weeklies ago. And stock appreciation rights, for those that don't know, is a way to compensate employees based purely on the stock price. And in Palantir's case, they are granted and vested at $50 with a maximum appreciation of $20. So $70 stock price. Above that, like, doesn't really matter. So 50 to 70, and as long as Palantir is above $70 per share, there's no reason not to exercise, because they can't appreciate any further. And that's why they mentioned, as you can see here, the accelerated stock appreciation rights due to market conditions is the wording in the latest filing. And that's this blue line. And that's 120 million of stock-based compensation expense that I expect them to incur for the next quarter. And what that looks like, I just use Wall Street assumptions, even though I think they are a bit low. So this is what Wall Street expects for net income in Q4, basically $0.5 of EPS on a GAAP basis. So it looks like they expect 130 million, which is a deceleration. I think they will actually accelerate, not decelerate, but this is what it would look like. However, when you apply that SARs expense that we've been talking about, looks like this. And that's the chart that kind of went viral on X when I posted it. And this will also mean something like an EPS miss of 90%. And of course, that's a one-time expense. I think it will be easy for management to explain this away if this does happen, where they miss EPS by 90%. They're like, well, we put it in our filing. We spoke about it on the earnings call. Yeah, the stock price went to above $70. Like, there's no reason not to exercise these stock appreciation rights and incur the expense. Maybe they will spread it out if they expect that they will trade above $70 for like several quarters. But given the actual valuation and pricing of the stock, I think it's kind of risky for Palantir to do that. So I would expect them to exercise all the outstanding SARs, which would mean a pretty big EPS miss. And then no one on Wall Street is actually pricing that in. I even looked at the Mariana, for example, that highlighted this in her actual price target update when she put out the Bank of America equity research note. She said, well, Palantir will probably incur this $120 expense, but she didn't adjust her EPS down to adjust for it. So there's always the case that, well, maybe Wall Street expects this cost and have already priced it in. I mean, they expect $0.5 of EPS, assuming that. Then net income would have to look like this. Net income would have to be 250, so basically $250 million for the quarter. And the margins would have to go from 20%, which we've had the past 2 quarters, into 32%. And I just don't think this is very realistic. So, yeah, in short, I think Palantir will miss EPS by a pretty large margin. And no analyst is accounting for it. If analysts at Wall Street actually did their job, they would say, okay, guys, Palantir is trading above $70. We have 2 months to the earnings. Maybe we should adjust down our EPS, but they're not doing that. So you could say maybe it's deliberate that they want to crash the stock. Maybe they're just oblivious to the fact that this will happen. Maybe they expect Palantir to be gracious and not incur the SBC. But I mean, I don't know what to make of this. I can just put the facts forward and like make up my own assumptions based on, well, why is this happening? But yeah, shout out to Mariana for highlighting this when I missed it. Probably a lot of the community missed it. But yeah, it's going to be $120 million expense, I expect.
So 16 analysts are currently forecasting approximately 11 cents. So back to your point.
That's non-GAAP.
No, that's GAAP.
No, 0.5 GAAP.
Yes. So just for 4Q 2024, 16 analysts are assuming 11 cents EPS and 10 cents on the low, 12 cents on the high side, 38%, 39% year-over-year revenue growth, just for 4Q. And so for fiscal year 24, they're expecting about 38 cents, and that's about 21 analysts. So I agree with you. I don't think that they're pricing that in. The SARs.
Let's start with Davis. Davis, what is your raw reaction to this, and how does this affect you thinking of holding the stock or selling it? Or
how you start with me? Honestly, what I feel like is going to happen is whatever happens with the stock is going to happen. It'll probably go down, and a lot of people like me that don't understand this stuff or really care to dive into the details, we're probably going to complain. They're probably going to complain on Twitter for a few days and be like, "Oh, what's happening? The stock sucks." Blah blah blah, and then every time this happens, the dip just gets eaten up almost instantly. And so I think we'll have an aggressive move downwards, but maybe not so much of an aggressive move back upwards, but it's going to go back up. People are going to realize why, because people are going to start asking questions like, why did this happen? And then
as a retail investor, do you feel any desire of, let me sell my shares before this happens? Like, how do you process that?
I mean, in my position, I literally can't. But
can you share my screen quickly?
If I wasn't, no, you're good. If I wasn't,
if you look here, Matt, on seeking out.
Hold on, Amir. Let Davis just. We're going back to
we let you
to a previous
for
topic.
About 5 minutes. Let's let Davis chime in for a little bit, my guy.
But as retail, I feel like trimming isn't a bad idea. Like I would want to trim something, like 10%. Why not? If you truly believe that there's going to be a dip, like. Just go off your own conviction, like play around, see, like learn. Learning is all about making mistakes. If you were wrong, you're wrong, but you still held 90% of your position. I see nothing wrong with that. I feel like retail, they trade based off of emotion. I think we all do to a certain extent. But I mean,
and because you have covered calls, you also probably wouldn't care that much if it takes a little bit of a dip, I imagine.
No, I wouldn't.
Which I think a lot of people are in your situation. That's why.
Yeah. Definitely. But I mean, the desire to sell is there. It's always been there. Like I said, I've made life-changing money, but am I selling? No, because my conviction in the company is higher than my desire to sell right now.
Okay. Arnie, your reaction to potentially missing on EPS?
Okay, I would underscore first this comment because it means that this idea of the SARs is still not completely clear to some people. Like, why can't they use cash to pay this stock-based compensation so it doesn't affect EPS or revenue? And this is the thing. The particularity of these share appreciation rights is that these are not shares given to employees. This is a sort of option that if it is exercised, it doesn't give new shares to employees, it actually gives cash. If all the SARs are executed, and we can assume they are at this point all executed, because imagine you are an employee and you have these SARs that you can exercise, and the vesting on these SARs, meaning that how you can actually use and execute these SARs is not based on time, like regular RSU, that you receive the shares upon a certain time. These SARs are market-based vesting, means that if the stock reached a certain level, they could be executed. And since the stock exceeded the $70 threshold, we can assume all the SARs to be executed by all employees having them. And if this happened, and we can assume all that happened, there is almost $1 billion of cash that is essentially moving from the cash pile of the company to the employees. And this has implication in terms of EPS, because the company has to recognize, hey, there has been this expense that we were expecting to be diluted upon many years, but we need to accelerate this expense because what we expected to be happening up to 2029 has already occurred in 2024. So that's why you will have the revenues not touched, the operating income not touched, like the operating free cash flow of the company, but this is a real cash expense that will be accounted in terms of EPS, but this time also in terms of free cash flow of the company, because there will be an outflow. So this has a further implication into what Palantir could achieve in terms of net income, because a big part of the net income, as Emir showed, is coming from the net interest. And right now we have almost $4 billion or around $4 billion in cash.
4.6.
If you remove 1 billion, boom, like that, that removes a part of net interest that helps Palantir staying GAAP profitable, but it's already GAAP profitable. So the
Arnie, do you think the algos will sell it off regardless?
Exactly. So that brings us to the key question: is this something really important for the company or the stock? And what could be the implications? Like business-wise, we mentioned there will be $1 billion outflow that we could expect. And does that change the value of Palantir? Well, to be honest, every day now, even inside the trading day, the valuation moves up or down 1 billion. So it's like not really it's not really something spectacular in terms of like the real business value. Like we have 4 billion in cash, 1 disappears. The company is still able to produce a number of free cash flow per year. Okay. What's interesting is that essentially with this 1 billion going away, Palantir is essentially vanishing all the free cash flow that has been generating in 2024. So this brings us to the highlight. Like imagine you are a newspaper, you are a bear, you want Palantir to be hit. It's like Palantir misses EPS by 90%. It's like, yeah, this company now is crap. And I think like what was an asymmetry back then, like on the opposite side, like the expectations were very low. Nobody was really paying attention to the real value emerging. Now we see the asymmetry on the contrary. Like we are aware that there is this potential digger that could hit us, but nobody is really paying attention to it. So at least we need to be aware. Now, what the stock could do, I think it is reasonable to expect that unless the positive side are so strong, so let's say 35% growth on the revenue combined with like 45% free cash flow margin, something that is so strong that you say, okay, take all the random expenses you want. I don't care. Like, this company is literally fighting so much. I think we will probably hit at first because there will be an algo reaction. But again, does that structure change anything from the company? No, it's just $1 billion of cash, like, disappear. Like, consider it a dividend that just disappears from the company. Does that change the potential earnings power of the company? Absolutely no. So,
And Arnie, you're getting that $1 billion number from what?
Yeah, I was gonna say, I
Is
didn't
a-
want to interrupt, but it's not gonna be over $1 billion in one quarter.
is a
Did-
$44 million SARs around for $20 of maximum value from each SAR. So $70 minus $50, each SAR can be worth at most $20. So every SAR gives the employee $20. And there are $44 million around.
44 million shares, you're saying.
SARs around.
SARs,
So
right.
multiplied is almost $1 billion.
Okay, because what I looked at, the chart I shared are the actual outstanding expenses, like by dollar amount. So I'm not sure if that changes depending on the stock price. You might be right, then it might be a lot worse than I anticipated. I just went off of what they
Because,
filed.
What you are right, like what you're in the income statement, you share like the actual value of like the increase in the actual value of these options, but then in the free cash flow, like, if my understanding is right, you will have like $1 billion poof disappearing. Like, imagine you are an employee, you received these SARs. Imagine you are just the only employee of Palantir. You received these $44 million, 44 million SARs, which could be executed above 50. If you execute all of them at 50, you receive 50 minus 50, so $0 per SAR. If you receive these SARs and you execute them at 70, so the biggest value you could achieve, you receive $20 per each SAR. So what the company will do is giving you almost this $1 billion.
Yeah, you're right. The total amount of outstanding SARs are, what are they? 48 million shares, basically. But we don't know exactly how many are market vested and how many are, time vested. Because as we mentioned,
Is there a distinction? Because my understanding is the RSUs are time vested, meaning that you need to stay in the company enough time so that you can execute them. From my understanding, and I could be wrong, so I encourage you to maybe challenge this, all the SARs are market vested, meaning that if the $50 trigger, like the condition is triggered, they automatically are vested. So the employees actually receive this stuff.
Yeah, I was also curious about that. You make a great point. I think they differentiate between time vested and market vested SARs. And that's why we get into what I said in the beginning of the show. Like, I don't think even Palantir expected Palantir to hit $70 per share, because the time vested SARs are set to 9 years. I mean, they expected this to take a long time. But then there is a portion that is market vested that only cares about the stock price, not when the time hits. And that's why I think, if I just share the same chart that we had.
I think Amir is right, because I think someone who joined the company in February of 2024 does not have access to the same types of SARs that someone has had for 10 years, right?
Yeah, so we have the SARs introduced here, and then they have the specific line that says accelerated SARs due to market conditions, and those are the market vested ones. So this expense that they expect if the market does award Palantir above a $50 per share, because when Q3 hit, I think Palantir was trading at 45 or something like that. So this didn't actually happen yet. So that's why they just put that in there. Like, well, if market conditions are right, we could incur $120 million expense. So I don't think all SARs are market vested, and they mention specifically in the filing both time vested and market vested SARs, where the time vested ones are noted to be like 9 years. So yeah, it's kind of mess. You might be right on how the cost might look on both the income statement and the statement of cash flows. I have to say, I'm not sure myself. I have never tracked a company that has had this kind of expenses incurred. However, we can expect, at least if we go off on income statement wise, going off of the expenses related to stock-based compensation that they note in the filing, it should be 120 million on top of the regular SBC, which will be a couple of $100 million, like something like 200-300 on top of that. So yeah,
Can I ask a
it's a mess.
clarification question around that graphic? That's that shows the trailing 12 month for each quarter. Yes.
No, the current outstanding expenses relating
Okay,
to
the remaining
SBC.
outside. Okay, that makes sense. Got it.
Okay, so these are the expenses that are yet to be recognized.
Yes, outstanding. Yes.
So
Matt, I was going to go to you as well. What is your thoughts on how the algos might treat Palantir and if that dip would be bought?
Algos means. Can you restate that?
Meaning,
Sorry,
if we miss on earnings and algos just sell it off immediately on the headline, like, do you think that happens, or do you think the market's priced it in enough to deal with it?
No, I don't think that we've been there, but I've been wrong over the past several months, of course. So, but I'm starting to see volume lighten up a little bit, and then you have some peaks of volume kind of coming through. We obviously saw the big wave come through and Christmas Eve, and that was like, pretty absurd, the amount of volume that came in just through the half day. And that obviously led us to going back up to $82, $83 a share. So I feel as though that there's kind of two camps here. There's people that recognize that Palantir is inevitable, and they'll continue to be a huge part of defense and technology for the government in America going forward, and also, NATO allies. And then you have the other folks in the camp that say this thing's overvalued, and I can see both, right? I sit in both camps. I obviously see that this thing has run many years ahead of itself. If you don't hit 30% year-over-year revenue growth on a comparable fourth quarter, and I know we're not going to dive into the numbers here, but it'll be fun, once we get into the latter half of January, before we get into the February earnings call for fiscal year 24, to kind of look at what numbers we need to hit. If we don't hit that 30%, I think that this thing's going to nosedive, by a good 10 to 15% within a matter of a couple days, if not in a single day. I think that, at this point, just like we alluded to, and I think we were all pretty much in agreement for the third quarter, that if they didn't hit over 30%, that the stock would sell off, and it hit 30%, like pretty much on the dot, that it just absolutely mooned. And I think all of us were kind of assuming it's pricing in 30%, not that it would need to moon after it hits 30%. So it's a little bit interesting. Will the algorithms buy it? I guess it all just depends. Institutional ownership and the institutions have been institutional ownership has obviously increased substantially over the past few months, and we continue to see the volume come through of hundreds of millions of shares a day, which obviously is billions of dollars being traded in exchange. So to me, that can only be done through institutions. As much as we would like to say we have that kind of cojones and firepower here in the retail community, and the 600, 700 people watching, I just don't think that we have that. So to me, will they buy up the dip? Maybe the folks that are outside of the main group of folks that may have missed the boat and still want to have that exposure to defense tech. But at the same time, I have a strong feeling that you need to have some sort of pullback, because this thing, while it's had some kind of pullbacks, maybe from like the 80s to the 70s over the past 2 weeks or so, it hasn't had anything where it's a sustained 10, 15, 20% pullback really since February of 2024. except maybe that one brief period before Q2 earnings in April, May, when it went from the 30s to the low 20s, which is the last purchase price I had. But I didn't know if we were going to get into it. I also wanted to hear why Arnie decided to take some money off the table. Or did we talk about that in a previous episode that I missed?
Yeah, we can get to that later at the end after the SAR segment. So this comment right here by Rob, thanks for the super chat. Gents, have you seen a company in the past have an ER miss due to SARs? If not, then this is something you might want to be able to look into to determine how the market reacted. Question to you guys, Arnie, we can start with, or Emilio, we'll start with you. Have you seen a company miss because of SARs?
No, I haven't, and okay, just that. I'll add my comments after. Go ahead, Arnie. Have you seen that?
Not specifically on SARs, because before Palantir, I've never seen the word SAR before.
Yeah, same.
And every time like you feel confident, okay, like I know almost everything on the company, you realize, okay, there is something new completely popping up. So no, but as as Amit underscored, like when we discovered this stuff during Palantir Weekly, like the similar reaction was to Robinhood when there was an expense that was there. Like people were more or less aware, like okay, somehow there will be like some expense. But when they recorded this contra revenue thing, it was like, what the heck is that? And then the stock corrected. Like the results were out. The stock dipped, and then people realized, okay, but this is not a structural problem. Like this is more a headline problem. And then the stock just went up again. So this is partly connected to why like I'm not confident right now having like 80% of a portfolio how I was a couple of weeks ago into the stock. I believe it is time to just return to a more like confident but still reasonable position. Like the underlying assumption is in having an oversized position is I see an asymmetry between the value and the price that the market is not recognizing. And it was very true when I was first very exposed below 10. Then when I went all in at like 15, and then when I added again, like before the latest ramp up, because I saw, okay, the price could be hard to justify, but I see enough substance to make me confident that the reality is emerging stronger than analysts and the general market perceives. Right now, I don't see that. Like I see more, okay, Palantir is exceptional, is recognized as exceptional, even from the biggest guys in the industry right now. The financials are pristine, but the valuation already incorporates like very strong expectations. And in that situations, I believe like there could be like an asymmetry on the opposite. Like even if the company performs extremely well, the expectations are high enough that the stock is vulnerable to some dips. And this SARS component, which is not appreciated by the market, like is not recognized by the market, is a potential risk and not something I want to be like exposed, vulnerable to, especially since I'm not working, I'm not receiving a salary, I'm investing full time. It would be just stupid to be completely exposed to something that could hit me like that. But sorry, just wanted to add this thing so that we go full cycle. Before, previously I said that I think all SARs are market vested, and Eimer corrected me, like he's right, that there are some market vesting SARs, probably most part of it, but there are also time vesting SARs. The difference is market vesting SARs, as soon as the stock price is above 50, they get triggered and they could be exercised. So like if someone received that, they could just use them. But then there are also some vesting SARs. Previously, we talked about the $50 threshold, which could be maxed at 70 to receive the full value of the SAR. But these time vesting SARs are a little bit different. They can be executed with a vesting over explicit service periods up to 9 years, and they could be exercised during a limited window if the company stock share reaches a certain threshold. Time vesting SARs have an exercise price between $39 and $70 and maximum appreciation values between 60 and 80. Essentially, this means that there are some SARs that are even more dangerous than the current SARs, so well above the $20 damage that we discussed previously, but which could be executed only like in the future. And we don't know exactly like what could be the price. But since the maximum damage could be 180, we could assume that like the minimum, like the maximum damage is like 180. So it's not really like they can't be executed right now because you don't have like enough stock price to actually judge that. But a simple observation from here that we see the SARs let me zoom it, like the SARs outstanding. There are like 48 million SARs around, but the weighted average exercise price per share is 50.75. So since the market vesting SARs have an exercise price of 50, we could assume that most of these SARs are market vested.
Okay.
Let's let Davis give his thoughts, and then I want to pose a question to you guys regarding this.
Bro, I have no thoughts on SARs, man. Just take it away.
Okay, look, so I want to ask, what do you guys think about SARs in general? Because they are a very different kind of way to compensate employees. Typically, when you are talking something like performance-based, where you set up targets, you typically talk about performance-based RSUs, where the goal has a target, wherein if they hit that target, then the employees are compensated. It could be if we reach $5 billion of revenue in 2025, or whatever the target is, they compensate the employees if that target is hit. However, SARs only care about what the stock price does. So even though the company could be doing really poorly, if the stock price is just pumped, I mean, they could just dump on everyone. Now, obviously, Palantir is a very high quality company, and that's not quite a risk for Palantir. But we have this strange dynamic where the stock went up 400% in a year. They've been executing flawlessly, and there's not been any negative catalyst. So the stock price, of course, hasn't had a reason to dip more than, well, PE and price to sales got expensive, which hasn't stopped it yet. But do you guys think like SARs make any sense, or would you have preferred to see more performance-based RSUs where the goals are clearly laid out, like something from an operations point of view, where they need to hit a specific amount of sales or something like that, instead of just caring about the stock price?
So the question is, should Palantir have stock-based compensation based more on performance, like sales, customer growth, etc., versus stock price appreciation as the basis for awarding shares? My quick answer on this is, I don't think the latter or the former, the idea of metrics-based compensation, would be different from stock-based comp, because the stock is supposed to go up as a reflection of an increasing business, right? In terms of the metrics going up. I just don't think anyone expected $80 this year, which is why it kind of got out of hand, and that's why they have this expense. But in general, I feel like most companies' stocks go up when the metrics go up, and so I don't think we need to have specific metric-based compensation. Davis, any thoughts on this? And then we'll get to Arnie.
I'm still trying to digest the difference between a PSU and a RSU and a SAR. Like I said earlier in the pod, it comes back to trust. Do I trust that management knows what they're doing? And the answer is still yes. So until they prove me wrong, I'm just gonna be with them. I'm just gonna trust that they know what they're doing and let them do their thing.
Okay, Arnie?
Well, the overall question could be synthesized is there could be any issue in giving these awards based on the stock price rather than performance metrics, because typically when you are deep into the value investing stuff, like you praise, like you search management that is clear in seeking goals of revenues, and more importantly EPS or just operating income, because you know that if those values are reached, then the valuation could be appreciated. Okay, but typically the theory from a value investing like the framework is you dislike heavily when the company gives only market based criteria to give rewards, because that they incentivize the management to be more short term, more into trying to pump the business, and that creates like also an effect on employees caring more of just making big numbers rather than quality numbers. And I think that's the challenge that Palantir is currently facing. Like we know that the biggest value of Palantir lies into the culture, the column of artist culture that has been what differentiates Palantir. Forward deployment engineers are very, very driven and also very smart, and they do this for a mission. But what if they receive wealth, too much wealth, too fast compared with even what the management was expecting? Like that could create some side effects, like okay, I received much more money than I needed, like with 1 year of work, or just let's say with 5 years of work, I received what I was expecting to make in 10 years of work. Okay, I'll retire early, or just okay, I'm just here for the money because now I could be. So I believe there is a potential risk here if this wealth effect could undermine the culture, and that's the risk that as investors we need to be like very focused on. Is are employees still driven? Obviously we can't do quantitatively, but we can do it like qualitatively. Like we can assess, are employees deeply caring about the mission, or they're just here because this is like a money printing machine for them? But we should also make one step back and be in the shoes of Alex Karp and the management. Why would you like to give an award like this in shares? I personally think they realized something that we have been discussing many weeks ago, so it could be nice to like touch the topic again, that I believe at this point that Palantir has this media resonance. There is a direct effect between how big the company is and how easy it is to get new deals. Because when Palantir now has a conversation with a new client, with a government, Palantir is not a $20 billion company that is just there, like it's big, but not
now they're the biggest defense contractor on the planet.
Exactly. So imagine like you knock the door of a government, foreign government, and you present yourself. Look, the market perceives that we are not only the coolest defense tech, we are actually valued more than Lockheed Martin, L3Harris. Like we are the biggest defense contractor in the world. The market sees this value in us. Don't you see the value in us? Like there will be a lot of value that you lose if you don't interact with us. So I think there could be a dynamic. I'm not sure this is like the real way to put it, but once the stock is so high, you are that condition that is a sort of fake it until you make it. Like there is like typically you don't have this direct connection, but once you reach a certain threshold of virality, of awareness, there is effect between how big the company is, how well it is perceived, and the actual value that flows to the company. An example could be Tesla. The fact that the stock has risen so much has made many people richer, they bought a lot of new cars, and that created like a lot of side effects also because more people got the car, more people saw the car. Many people asked the friends, oh, but how cool is your car? Let me try it. Oh, this is the referral code. So now we're talking B2B with Palantir, so very different dynamic. And the dynamic is more like, if you present yourself almost as big as Salesforce, Oracle, which Dan Ives believes Palantir is the next big enterprise software, the perception changes the reality, creating a side effect of facilitating business deals. So I think this is the reason.
It's essentially you're popular now. People want to talk to you because you're popular. That's it.
Exactly. So it's like you are an influencer. You have your virality moment. You double down on that, and you essentially oversell a little bit. But that overselling a little bit actually creates business value for you so that you can keep it rolling. And I think this is the bet that Carp has essentially done with these market-based shares, even if like it is going already beyond their own expectations, I feel.
Okay, so let me explain this very simply. Instead of what we were just listening to for the past 5 to 10 minutes. Generally speaking, many companies pay share-based compensation. To me, I think it's very simple. You can either get annual share-based compensation rewards or something that are based off of, say, a spot bonus sort of award or what have you. I think it's very simple. I think the companies can grant rewards however they see please. I think they just called it an SAR due to the fact that they wanted to differentiate it from normal annual RSUs that they generally give out at the end of the year. I think it's for people that don't necessarily get a lot of share-based compensation, it can be very confusing. I kind of understand it because I get some of my salary or I guess my compensation and some sort of share-based compensation myself. So just like next year, I'm going to get 2 different types of share-based compensation. And if you wanted to, you could call them something completely different. I'm getting them for 2 completely separate different reasons. So if you just say SBC, people might get confused as to, oh, that's your normal share-based compensation that you get on an annual basis. But in this particular case, it was focused specifically on the actual stock price itself. Managers have this all the time within organizations, and so I don't think that this is anything new or different. I think maybe it's just due to the fact that retail investors are starting to dive a little bit more into it. I think it's appropriate, specifically for CEOs. Like I think Arnie mentioned Tesla, and it's no different than what I see many CEOs get. Many CEOs, I think a lot of people still don't recognize, either take $1 of salary or less than $1 million of salary. The majority of their tens of millions of dollars of actual payouts are from some sort of stock-based compensation or SAR. So I think people just need to recognize that these things are all over the place, and it's shouldn't be anything new. It's just for us specifically, maybe the frontline worker doesn't necessarily get included in some of these SARs. It's most of the time management, CEOs, or directors.
Okay. Let's end off the show with this last segment, and then we will be done for today. So The Economist picks Alex Karp as the CEO of the year. I think all of us have been waiting for one of these mainstream business media outlets to pick Karp. None of them really did until 3 days ago, where The Economist said that Karp is the CEO of the year. So they said, among our finalists, however, it is Mr. Karp of Palantir who stands out. Over the course of 2024, his company's market capitalization has rocketed from 36 billion to over 180. Its underlying financial performance has been impressive. Palantir is expanding rapidly, with analysts expecting it to notch up revenue growth of 26%, up 10 percentage points from the year before. It has also become much more profitable, with operating margins doubling to 15% in the 12 months of to September 2024. And a sign of its ascendancy, Palantir was added to the S&P 500 index of America's most valuable companies in September. So the question here, to go around the panel, and we'll start out with you, Davis, is what are your 2025 expectations on Palantir? It could be the stock, the company, anything you're expecting next year.
I just want them to keep executing. Like, I would love, because I'm in healthcare, right? I would love to see them just completely take over healthcare abroad, not just here. I know we're in almost 20% of hospital beds in the US now, but I want to see them continue what they did with the NHS in other countries. Like, go for all socialized healthcare. Just take it over, fix it. Healthcare's a mess. Over there, I've heard it's a mess, and I know firsthand that it's a mess here. So that's what I'm really looking forward to, is that they just attack the healthcare sector, make it better, because it'll help me, it'll help the company, it'll help everyone. I mean, that's what Palantir does. It literally helps everyone and everything. So that's what I'm looking forward to, because healthcare is such an untapped market. We spend trillions of dollars every year on healthcare, and that's what I'm most excited for. Obviously, I want them to continue killing it with commercial, government, and businesses, but I just want them to keep doing what they're doing. Like I said, if it's not broke, don't fix it, and it's definitely not broke. Can they make things better? I'm sure they could, but that's not up for me. All I can do is just invest my money in them and help spread the word, and that's what I'm going to continue to do.
Amir, your 2025 expectations for Palantir?
Look, I think they have been accelerating on all cylinders. We are seeing margin expansion. A lot of the things that we have been saying that Palantir has been lacking historically, like if we go back 1 or 2 years ago, I think they are starting to solve a lot of that. So as David said, a lot of it is just to keep the momentum going, keep expanding margins, keep finding ways to scale boot camps. I'm sure we're going to see warp speed impact more in 2025, probably new products. I mean, these guys are just working nonstop, and it's kind of hard to predict what's going to be next for the business. But the one thing I do hope that they solve, not only for Palantir but for the world as a whole, is that Europe is really falling behind. If you look at Palantir's international sales, they've actually been declining. That's a big issue, and I am European, and I am seeing a lot of issues with the European economy. I mean, economists have them growing at 0% GDP growth. I mean, things are rough. If someone can fix it, it's Palantir, and it's a lot of money to come and collect if you can help accelerate this economy here. So I don't know. I want to see international business do better for Palantir, but I mean, as a whole, they've really been executing, and that's also been reflected in the stock price. As I mentioned earlier, there hasn't really been a lot of negative catalysts for the business. So the stock hasn't really had many reasons to go down. I mean, they've just been executing. There's just positive catalyst after positive catalyst. So we talked about SARs briefly, for a long time, but I mean, that's just a one-time expense. I mean, it's nothing operational to the business. I think for 2025, yeah, we'll get into it more later, like numbers-wise, but yeah, a lot of the same things, I would say.
Arnie, your 2025 expectations?
Before we go into that, just show again that post, if you have it still open, like a carp named blah blah blah. Notice how one of the first information over the course of 2024, his company market cap has rocketed from 36 to 180 billion dollars, and we were discussed previously how the change in the market cap has a ripple effects potentially when you have a certain level of media coverage, because that trigger again post like this. What do you think a carp would have been chosen as the top CEO if it only executed on the business side, and that would have not been reflected into the stock? So
Nope.
I believe. Exactly. So while it is true that market cap doesn't automatically translate to revenues, and it is obviously more important to generate revenues, operating income, and so on, like the fact that Palantir as a stock is becoming perceived as a successful story, that automatically now can affect the probabilities of Palantir becoming a very successful story that could capture the entire software AI market. And every year potentially is just one step closer to that goal of full dominance of the space, a space that we know that is very, very big, potentially $1 trillion TAM. So we should ask ourselves what we would like to see Palantir to do so that it increases the chances of dominating it all. And what I would personally love, and I think at this point is not only important, but I would say absolutely important, is that Palantir is able to transform this interest that there is on the company to actually make people interested in building on top of Palantir, because that is the key bottleneck that we currently face. Like we have the bootcamps that essentially disrupted the market, the go-to-market approach, making it super fast. But that can't be as fast as you know what? I've heard of Palantir. Let me try it on myself. I have software developer friends that oh, Palantir is so cool. Like let me try it. And well, you can't. So the unfolding of the developer tier, which is free to test up to a certain limit, now is limited only to certain geographies like the US, UK, if I'm not wrong, India, Canada, but general like European Union is not available yet. And there are a lot of developers that maybe just want to try it. But even within the countries that it is available, I think the big opportunity now is to exploit this mass virality moment that Palantir is having with a lot of media coverage, a lot of like a big market cap, to essentially stimulate people, build on top of this. Because if that happens, that creates further trigger effect, ripple effects into, okay, more companies can adopt this stuff, more companies can adapt, and that creates a further business value. So the big bet of 2025, in my opinion, will not only having the metrics expanding, we have been discussing this for a long time, so keeping us sustained at 30% growth or more, keeping the margins, but this qualitatively is the most important thing to happen in 2025, in my opinion. Having a developer community that is emerging strongly and creates these strong ripple effects. Because, for instance, you would not have Apple if you didn't have the app developers. And right now, Palantir could have reached this point, but if it wants to become like a $1 trillion company, it needs to have developers on top of it.
Matt, your expectations for 2025?
Sure. Yeah. I mean, I don't want to reiterate what a lot of the guys said. I agree wholly with respect to the continued progress with new products out there. Obviously, getting more recognition from consultants from like Accenture and folks of the like that will continue to recommend the software. But I think I want to thank Arnie for putting out that UBS report. I read through a lot of the comments that a lot of the clients responded back with, and I still think there needs to be some polishing of really the cultural pushback that some of the companies are seeing when they actually go in and do things. And not only that, but there's also, I still think, a huge piece of like IT companies that or not IT companies, IT departments within companies that are extremely afraid of the power of using Palantir software, due to the fact that it really will eliminate, I think, a lot of those jobs. And I think I think that that's their fear. But in reality, embracing Palantir, the Foundry operating system, the Gotham operating system, and AIP will help supplement what you actually do and allow you to achieve way more. And so I continue to see throughout that entire, I think there's like 20 or 30 customers that I read through. Some people say it's just too expensive. Some people say we'd rather use IBM and other C3 AI and try to get our working stack, to compete with what Palantir does that way. You have other people that had said, they just don't want to do it for political reasons within the organization. So I still think that there's a little bit of that sales piece that we kind of have that hangover from 2022. It's all we would talk about, right? But at the end of the day, I think we're miles ahead of where we were. We're continuing to get the recognition. I'd love to see the revenue catch up and actually accelerate to the 30-40% range. That would be absolutely phenomenal. But I've never had a doubt in my mind that Karp was the guy, and we have great leadership and founders that continue to be remaining with the company. And I'm really looking forward to seeing what they have, not just for 2025, but for the next 10 years. I've always bought this company wanting to know what's going to happen in 2030 and what they'd be able to change. And, I think the impact, I would say, is more than what the revenue shows. And I'm curious to see if that's because we're giving away, and I've always wondered this, if we're giving away more of the software than we really kind of give credit to. And eventually the revenue is just going to show up in a massive wave somewhere. And I'm still very confident that that's what's going to happen. So,
Amir, any final thoughts from you?
I was gonna say the UBS report. We missed an opportunity to talk about that one. That was.
I mean, we can
maybe some other time. No, it's fine. It's fine. But yeah, good point, Matt. Really. No, I just want to say someone linked me. Speaking about Karp being Person of the Year, of course you become you come under a lot of scrutiny when your business goes to $180 billion of market cap. And someone on X actually DM'd me. There was this podcast that were reacting now because a lot of Karp clips have gone viral recently, where he says a bunch of things that we are used to, but maybe the greater audience aren't quite used to. It was two guys sitting and reacting to clips of Karp, and this was like a kind of big podcast. I mean, we're talking like 100K subs on YouTube or something like that, and they were like totally shocked by what Karp had to say. And I think a lot of people are starting to wake up, and it's kind of interesting, as an investor in Palantir, to see like what does the average person think about Karp. It's quite interesting how he's starting to make ripples in the general public. Karp is a superstar, and I can't really show it now, but it was I have the signed Karp Time magazine thing. It's like my most prized possession. Yeah, nothing really more to add. I just think it's interesting that people are starting to wake up to Trump. I mean, we mentioned that All In podcasts are praising. Did I say Trump? I meant Karp. All In podcasts are praising Karp. A lot of people are waking up to him, and we were early on Karp as well. Long Karp.
Guys,
go ahead.
Just a little note. Let me share the screen again. Okay. So here I shared the key highlights of the comments of the 17 clients UBS actually interviewed. This was probably the best equity report I've ever seen so far. Not only covering Palantir, but in general. Like, I've never seen such detailed questions and comments to actually help you understand the details that the company maybe don't officially disclose. And there are like some very big gems. But apart from big gems, like the overall picture is like I shared these highlights, and this tweet has got like 240K views with 1,000 likes and 900 bookmarks. So just this, not saying, like my numbers is cool, but imagine how many people saw this. And I also saw Shy on X literally copy pasting and chat GPTing this post, having similar numbers. So this to say, like, the media coverage that has Palantir can be transformed into a viral moment of mass adoption when you start seeing clients saying Palantir is the perfect all-in-one platform, like where you do everything on it, from data lake all the way up to the analytics and implementation in one place. You have a better understanding of how Foundry relates to AAP. You realize how the pricing is done, something that Palantir is not really be very open, but for us investors, it's very important to understand that most of the revenues now are generated based on consumption. And if more people want to use Palantir, they receive value from that can keep compounding at a very low marginal cost, because once you have the client expanding based on usage, the client just use more the platform, and it pays you more. You don't have to sign new papers to make him expand. It shows how AIP is actually used to facilitate the foundry of sales. But look at this comment, for instance. Palantir is costly but unmatched. You could do something potentially similar, maybe at a lower price, but the reality is you will not get the same stuff. So if you want to have like the full power of the platform, you really need to embrace it. And if you do, you have an unmatched platform. So this to say, this equity report, for instance, has automatically become a very powerful marketing tool that reached, on my case, 250 views. It generated a lot of ripple effects, even also there. The similar post got similar views. So imagine how important it is at this point that the market cap is high, the perception has completely flipped. Palantir has literally this one opportunity, one lifetime opportunity to literally become viral in the enterprise space. And if it doesn't capture it now that the conditions are fully maxed, like there could be no better situation than this, we would lose the opportunity. But if we capture it, the $1 trillion path is on our way, I believe.
Yeah, and it really provided a lot of clarity that we've been missing. I mean, everyone has been curious about, okay, how do they monetize AIP? And this one had extensive comments specifically about how they are being charged for using AIP, like consumption-based. We saw someone that said that they were a client from 2023, sorry, and year over year, they're spending 30 to 40% more with Palantir, driven specifically by AIP. And suddenly this notion of we are just taking the whole market with AIP, it makes a lot of sense that it was basically given for free. But now a year later, we see that it's driven like 30, 40% increases of cost internally with the customers. But yeah, I don't know if we're ending this. I just want to say finally on that UBS report, it's so funny. They initiate with an $80 price target. And Palantir was trading below $80 at the time of writing that and publishing it. And they say, it's too expensive, we're not going to buy now. I'm like, but your price target is above where Palantir is trading. What do you mean it's too expensive? We're going to wait for the stock to cool down. So that was kind of interesting. And that they go with the highest target on the street with a neutral rating. This was also kind of like, I'm like, what's going on here?
They wanted to make like the shock report with 80 being like, oh, but until they finished the report, because it was a very big one, so it took a lot of time, the stock was just up. So it's like, okay, we still believe it's worth 80. We are not confident enough just putting a bigger number, but it is important that we drop it.
Yeah, I think they definitely wanted the headline of $80, but the neutral rating was, I agree with Amir, kind of weird if you're that bullish on it. But the exciting part was just the interviews and how deep they went into. Like, I don't think Mariana or Dan Ives has gone this deep on a report. Maybe they've done it personally, but in terms of the raw data, it was pretty exciting to see that. All right, that's it for us. 2025, we're going to see what happens to Palantir. The stock might go up, it might go down. We're going to have to see. And if the momentum can continue, I think it's going to be really important. But I think the one thing we all can agree on is that this company is trying to accelerate growth at a high level. And this year, I don't think it's that crazy to say they get back to 40% growth this year. I think it might take till 3Q. A lot of things would have to go right. But if they do that, I mean, and the macro holds up, you know, this could be another pretty exciting year for Palantir. All right. Davis, Arnie, Amir, Matt, thank you everybody for joining. Everyone's Twitters and YouTubes are in the description. Please make sure to check people out. We'll be back next week for the Palantir year-in review. We'll try to get CodeStrap on that episode. And we'll see you guys next time on Palantir Weekly. All right, everyone. Have a good one. Good night.